I'm Jerrod Ankenman. I've been a quantitative researcher at Susquehanna for nearly 11 years now. When I started here, I worked on high-frequency equity trading. After that, I was an options trader and an options quant. And now I work on sports and election forecasting and a bunch of other fun stuff. One of the things that I did before I was working here was I was a professional poker player for quite a few years. I won a World Series of Poker bracelet in 2009, and I was a co-author of an influential book on poker called The Mathematics of Poker, which was one of the first attempts to use quantitative methods to win at poker. Here at Susquehanna, we play poker a lot, and it's part of our culture. The partners we're all poker players. Jeff Yass was, after graduating college, knew that he didn't know exactly what he wanted to do, but knew that he didn't want to wear a suit and tie. So he was playing poker professionally, and then he came to Philadelphia to trade options and recruited a lot of his friends who were also poker players to come, and together they founded Susquehanna in 1987. So poker is a big part of our culture. We believe that there are deep links between poker and trading, and especially in the way that you make decisions and the thought processes that govern those decisions. And we have found that poker is an excellent training tool for training those decision processes. So what I'm going to do over the next little while is sort of break down a poker hand into three different pieces, and then break a trading situation into three pieces and show links between them, draw parallels between them. And hopefully by the end of all this, you'll have a much better idea of why it is that we do poker. While it is fun, we're doing it for a serious reason, which is to train ourselves to make better decisions in trading. So the three pieces of a poker hand that we're going to look at, we're going to do them sequentially. The first is going to be the ante. The ante, which is like the contribution of chips before the hand begins, and gives us something to fight over. And then we're going to talk about the decision-making process, which really is the big core thing, the reason why we really do this. The other pieces are useful, and we get them as side effects of that decision-making process. And the third category of what we're going to talk about is what happens after you make those decisions and outcomes that occur, and how we use that also as a training tool for what happens after a trade is over. Let's begin with the ante. Poker hands begin with an ante. This is money that the players contribute to the pot before the hand begins. In Hold'em and other blind games, there will be blinds. These are just another form of ante contributed by particular players at the table in a rotating fashion. But this is money that goes into the pot before the hand begins. Now, what is the purpose of this? Well, if there is no ante money, then there is nothing to play for. So you can think of a game where there is no ante money and everyone just gets dealt a poker hand. The question is what is a winning strategy? Well, it's quite possible that you can't win at this game if everybody's playing correctly, because suppose you had a winning strategy that would enable you to win money at this game, then everyone else could just respond to you by never playing any hands. Since there's no cost to playing in the game, since you don't have to put any money up at any point, the ante is what drives people to have to play. If you had a winning strategy which involved playing in some way, and then everyone else could just respond by not playing at all. So the ante is what makes the game worth playing. It's like a tax that makes you have to play hands. The larger the antes get, the more hands you have to play, and the more action there typically will be. Sometimes the ante can get very large, in which case you kind of have to play a lot of hands and it might diminish the skill. But that's usually not what happens. Normally, as the ante gets bigger, the game becomes more skillful. So this pile of money that everybody's playing for gives us an incentive to play more than just the super premium hands, more than just the very best hands. Now, trading as well has some things that we could properly characterize as ante. So first of all, Susquehanna is a big business, and a business has costs, right? Every business has costs: office space, furniture, technology, salaries, and so on. We additionally, as market makers in the financial space, have some like special costs. We need co-located servers, which are located in the exchanges, so that we can be as fast as possible to respond to market conditions. We need to subscribe to market data feeds. We need like very fast networking, very fast with very high uptime. We need very fast market data processing. All of these things are like investments that we have made both in time and money. And all of that needs to exist before we can even begin, before we can even trade. This is all happening before we've ever traded a single product. Just to play in the game requires this outlay of resources. So that's like a big pile of money that it costs us to play. And it gives us incentive to make trades, to play hands. And those things are very similar in that way. So in poker, there is the ante and it's contributed to the pot, and that's what we fight over. In the financial markets, the money that we fight over is separate. We don't put all the money into a pot and then all the market makers, whoever trades best gets all the money. It's not like that. But what there is to fight over is this notion of order flow. And order flow is basically there is a very large world of people who want to buy and sell various securities and other products for investment purposes, for many different reasons, with many different goals in mind. There are people who are trying to squeeze out value from their investments. There are people who are just trying to like set some money aside and have it grow for their retirement. There's a wide array of different types of customers who want to come to the markets and buy this, sell that, do whatever trade they want to do. And one of the functions of market makers is to allow them to take those positions in the way that they want to for a small piece of edge. There's often this idea of there's a guy who runs a business and he is really good at running his business. He is not really good at, trying to value financial instruments, but he has a risk that faces him and he wants to hedge that risk. So he comes along and he wants to buy, say, some option or say some other product. And we as market makers are in the business of figuring out that thing that we're going to sell him is worth 305 when in fact, and then we want to sell it to him for 307 and make 2 pennies, and that's our business. And we can both do that trade. He gets to hedge his risk for not that much money, and we get to like make a small amount on a trade without a lot of risk. And so like both sides can win to this. So this type of environment is actually win-win both for the customers and for the market makers. That order flow of all different types, all the way from retail investors who don't have any special information, they're just putting money away for retirement or doing whatever, all the way to sophisticated hedge funds. There's all this money that all the market makers are fighting over. And so in that sense, this fills the role of the ante, the reason to play. The next category is, I think, the real payoff here, the thing that we really do poker for the purpose of training decision making. So what I'm going to talk about is the moment of decision in both poker and in trading and draw some parallels between them. Let's talk about a poker hand first. So there's a moment when the game begins. So the blinds are posted or the antes are posted, the dealers finish shuffling, they deal the cards, and now it's somebody's turn. Likewise, in the trading world, we have the market opens. So after the start of a poker game, right, everybody has received their hole cards. Now, hole cards are a key piece of what we would call private information, right? Hole cards are something that a player can see, but nobody else can. And each player has their own. In the same way, we have private information here at Susquehanna. It's the result of traders trading and talking amongst themselves and building up a playbook of like information about how do the markets act, what needs to happen, how should we respond to various situations. Additionally, it's the result of quantitative researchers taking large amounts of data and the history of things, running back tests, like enabled by technology, learning from the past and analyzing it, working with it, and producing strategies, models, analysis that traders can use to inform their decisions and make like better decisions, so on and so forth. So that's all private information that we have. In poker, we have public information. This is cards dealt face up. So in Hold'em, there's a board that is in everyone's hand. Like, by the end, it will be 5 cards, and they're all face up. Everyone can see that information. And they're going to combine their private information with the public information that is face up on the table. In stud, everybody gets face up cards that belong in their hand. In the same way, in trading, we have public information which is released on a more or less constant basis. We have news, we have press releases, we have SEC filings, we have all kinds of ways in which companies like communicate information about their businesses to the markets. And those things are typically governed by a certain kind of like fairness where like everybody gets the information at the same time, right? We additionally have things like the Fed where they release the results of the Fed meetings in a very controlled manner so that nobody can gain an advantage by getting the information before anybody else. That's public information. And the last piece that I think is very important is that we have other people's actions to look at. In poker, if it wasn't your turn to start, if other people acted in front of you, it's an advantage. You get to see what they do. Did they raise? Did they fold? Did they call? What were they doing? What were they thinking? And you get information about what's in their hands because they have acted in front of you. In the same way, in the markets, we see other people's actions. All the trades that are happening in the stock market get printed to a tape that is like available to everyone to see. This traded here for that price, this traded there for that price. One of the main jobs of our traders is to look at that information about other people's actions in the marketplace and interpret it and like make adjustments to strategies or other like things based on their interpretation of what's going on in the marketplace. Now we come to like a special moment in the poker hand. And it may come many times, but now it's our turn. So it's everybody else has acted, and now it's time for us to act. And our goal in our actions is going to be, for thoughtful poker players, is going to be to maximize expected value. Okay, this is at the core of our poker play. It is at the core of our business. In the same way, in a trading situation, there may be a trade that appears, and now a trader has to like evaluate that trade and decide, do I want to do this trade? If so, for what price? And so on and so forth. At that moment, that trader's like main concern is going to be to maximize expected value. There are issues of risk, but like in most cases, the risk that we're worried about is not the risk that we will get a position and it will wiggle around randomly. It is the risk that we are wrong, and the person who is giving us that position knows something about what's going to happen, and our trade doesn't have positive expectancy. So maximizing expected value is the parallel between these two things that like governs all of our choices, both in poker and in trading. In both cases, we have to make a choice now. Okay, not right this instant, but like we don't have a lot of time. If you think about every poker hand for like a minute and a half, you are not going to get invited back to that game. You have a little bit of time to think for a moment, but really you need to act. In the same way, in trading, there are opportunities, and if you think about them for too long, somebody else might come along, and somebody else is thinking about them, and they might come along and take that trade, and you won't get it, except if it's bad, in which case it'll still be there after you've thought about it for a while. You have to be ready to make decisions with information that is incomplete. If you could go off to the lab, and you could take all your poker knowledge and all your poker resources, get out your solvers, get out your databases, go and study this situation. Like gather up as much information you can about your opponents, how they play, what's going on, and like do a bunch of work. You could probably make a very good decision in almost any poker situation. The same thing is true in trading. If you could take a trading like moment and say, there's this trade, I don't know whether I should do it or not. And you can take it yourself or hand it to a quant or go off and study all the trades in history that have looked like this one for some definition of that. And like study the history of all these things and do a bunch of analysis and research and models and whatever. You could almost certainly make a pretty good decision. What we have to do is develop a decision-making process, usually based on heuristics and whatever analysis we can do in a very short amount of time, that makes these decisions as close as we can make them to what we would decide if we had all the time in the world to think about the decision. And that's what it is to be a good poker player. That's what it is to be a good trader, is that the decisions you make under time duress, with incomplete information, without enough time to think about it, are close. They can't be as good. That would be silly, right? You don't have all the time, and so you can't make as good of decisions. But the closer that your decisions are in the moment to the decision you would make if you had infinite time to think about it, that's what it is to be good at these things, to be a good poker player, to be a good trader. And that's kind of one of the deepest links between these two things, is they both have this exact property that you have to make decisions quickly without all the information you would like, and the goal is to maximize expectancy while you're doing that and do as close as possible to what you would do if you had all the time in the world. All right, let's talk a little bit about what kinds of inputs you might take to your decision process in poker. So now we're talking a little bit about the lab. Obviously, we don't actually typically go off and study one hand for like a week in the lab in poker, but what kinds of things would be part of our decision process? So the first thing, the gold standard in certain respects, is that you would take the history of hands that you have played with this player. So, many hands in poker end up to be heads up, where you're playing only against one other player. And so that player becomes your main focus. What do they do? How do they play? What is their strategy? What can we figure out about their hand? And previous hands that they have played against you or against others are like direct evidence of all those things. So that is a really good source of information. The difficulty is that no matter how many hands you have played with somebody, you have only sampled a pretty small part of the gigantic poker tree. So all the hands that they've ever shown down at a showdown with you are only a small piece of all the different paths that could be taken. So, and most players, you haven't played very many hands with them at all. They may be like strangers and you have no idea what's going on with them. They may be people you play with regularly, but you still might have only played a few hundred hands with them. So that amount of information is not always enough to make good decisions. You might want to expand that definition. You might want to consider history of players like this. And one of the big sort of deduction things that goes on in poker in terms of exploitive strategies is to classify opponents and say, this opponent is like that opponent. And so I can use information from both of them to make inferences about what they might do in different circumstances. Now, you could divide all players into two categories and say, all right, I have two groups, and I'm going to use all the data from all the players in those groups to infer about how they're going to play. That would be possible, but not terribly effective, because you would have a very large sample if you looked at half of all the hands you've ever played, but many of the players in your groups would be pretty far apart in terms of how they actually play, what their strategies are. On the flip side, you could have many, many, many classifications, divide all the players into groups of one and have one group for every player. Then you would have very, very good data, but not enough of it. And so the task, the challenge is to come up with profiles, stereotypes, if you will, that give you information about a class of players who are close to each other in the way that they play. Then say, now I have increased the sample size of what I've seen while I am still staying pretty close to the player I'm trying to evaluate. The point is to strike that middle ground between I have enough classifications that I'm getting meaningful information about the players that I'm looking at, but not too many, not too many such that I'm being too specific and I don't have enough power in my statistical sample. What else can we use to like help us to do make good decisions here? We can learn from books. I will tell a secret. Most poker books are not that good. There are some good ones, and you can find them by searching online perhaps by looking for lists of the best books and then taking the intersection of those, you're likely to find some good books. But many books are not that good. The good books are worth their weight in gold in poker. And so I encourage books as a great source. But you can actually learn from bad books as well. They have information in them about how the person who wrote the book and people who read that book and learned from it think about poker. And so you can actually learn information about what your opponents are doing, even if it's not the right thing. So we should not neglect bad poker books as a possible source of information. How else can we learn? We can look at videos. Videos are a great resource. Probably the best way to get better at poker is to discuss hands with other players. Players who are at your level, players who are a little better than you, and even players who are a little worse than you, right? Just to go into it with an open mind, with a desire to learn, and to say, I want to talk about this hand that I played. Here was the setting, here were the things that happened, here was my thinking, and here's what I decided to do. And then listen to these other players who will have a slightly different take on it. Sometimes they'll be like, yes, I actually think you made a good decision. I agree with your reasoning. And then you can, feel good about yourself. Sometimes they will say, did you consider this? And you will be tempted to defend your actions and not listen to what they have to say, but you have to fight that and instead listen to, actually, no, I didn't think of that. Or, I considered it for a moment, but maybe it's more important than I thought. These are like the prime ways in which you can really, really get better at poker is by discussing hands. Obviously, you can learn from people who are better than you, right? This makes perfect sense. You're like, they're better than you. They know things you don't. They will notice things that you don't. They can point out errors that you make. And people who are at your level, you can gain a lot from just because they will be approximately at your level, but they will have slightly different insights. They will think of things in slightly different ways. And by taking your thought processes and their thought processes and putting them together, you can gain a lot. Honestly, you can still learn from people who are weaker than you. First of all, if you expect to talk to people who are better than you and have them help you get better at poker, there's a sense in which you ought to karmically pay it forward and do this for people who are weaker than you. So that's one piece. But you can still learn from them because a person who is weaker than you at poker can still point out stuff that you missed. They can still say, this is what I would have thought of. And sometimes it will be things that you didn't consider. So talking to other players about how to get better at poker, how should we play these hands, how should we do these things, is probably the very best way of getting better. Now let's talk about the decision process in trading. And what you're going to hear are a lot of the same things with like very little translation. When a trade is coming up, what do we think about? One thing we think about is our history with this customer. Sometimes we have counterparty information that allows us to know who we're trading with. And we know, or we've seen this person or this institution, whoever, come in the past. They have this trade that they like to do, and we've done it with them before, or we've seen it before. And so we're, in that sense, we have experience with them. We've maybe looked at these trades before in depth. Maybe we did lab work on them the last time, and we can use that lab work now to govern and to inform our trading. Secondly, we might have situations where we have history with customers like this, okay? Again, we have this classification problem, but there are particular trades that many people like to do where we can recognize sometimes that this is thus and such a trade. The point is that there are a number of trades which are popular with like a wide group of people, and if you looked at those trades happening potentially at a particular time and just treated them on the face of it as like information, you might overreact to what's going on. But if you understand, oh, I see what's happening here, and there isn't a lot of information in this trade, it's just the trade that a lot of people like to do, you can like be much more accurate in your like ability to assess where should I offer this, what is my pricing, should I be making, has the market like, are there dramatic moves happening in the market, or is it just that a lot of people are doing this one particular trade that they all like to do? So that's information. We can classify trades and customers in this way. Inside of our private information, like we talked about before, we have analysis that we've done in the past. We have, obviously databases that contain like history. We have models that contain information about how to price things. We maybe tweak parameters and see how our models react to the tweaking of those parameters. We can do sensitivity testing, a lot of things like that. These are the kind of equivalents of books, the equivalents of videos. These are like our tools that we have developed that are proprietary and super useful in terms of like, how do we make good decisions, right? Just like in the poker situation, if you are a trader, one of the very best ways to get better at trading is to do exactly what I described in the poker situation. This trade came up, I made a decision, here was the context, here were the things that happened, here was what was going on with the, here were all the things that I thought about, here was how I made my decision, and this is what I decided to do. And other traders with experience, maybe more than you, maybe the same as you, maybe less than you, can add to your knowledge, can add to your analysis, can confirm your opinion and like, give you more confidence, can point out things that you might have missed so that you know what better to do next time. This is a core part of what we do at Susquehanna on the trading desks. Traders are constantly talking to each other about trades that they made, soliciting opinions, and growing together. Okay, the third category that I want to talk about now proceeds right out of the decision-making process, or it's actually what happens after that decision-making process occurs. So we're going to talk about the outcomes of our poker decisions, of our trading decisions, and what's going to happen is after we have gone through this like well-developed, well-built decision-making process that's built on heuristics and is like a good approximation of what we would do if we had all the time in the world to analyze these things, we're going to make a decision. In both poker and trading, we have these decision moments and we make our decisions. And then there is noise. So what I mean by that is that perhaps like in a poker hand, we might like get all in with a couple of cards to come. And that's the decision has been made. Now we have committed our chips. Our opponent has called, and now we sort of turn over our hands. And now cards are going to be dealt off the deck, and they are random. And like what happens there is not inside of our control. It is just noise, right? Our expected value might be like small but positive, right? We got our money in good, we have a certain edge, but the actual outcome is going to be either we win their whole stack or we lose our whole stack or something like that, right? And those outcomes, like by the law of large numbers, like if you do this enough times, like many times, they will converge, and you'll get close. Your actual results will get closer and closer to your expectancy. And in some sense, we work in that way here at Susquehanna. We have many traders making many independent trading decisions, and we hope that we are getting to the long run fairly quickly and that we don't have a lot of noise. But it can be very difficult, both in poker and in trading, to assess like what's actually going on by looking at our results. Okay, I'll give you an example from Limit Hold'em, a game that is not played so much anymore. But in that game, in a heads-up game, a pretty decent edge to have over an opponent would be like 0.02 big bets per hand. where the standard deviation of a particular hand would be 2.5 big bets per hand. So that's like 125 times bigger, the standard deviation of a hand versus like the let's call it the drift of a hand, or the expected value of a hand. What this means is, in order to get a good handle on what that drift actually is, we would need to play a very large number of hands to be within like even any kind of small margin at all, okay? Now, this is a problem in poker. We can't A/B test our strategy, say, I'm going to play this strategy, and then I'm going to make a small tweak to the strategy and play that strategy, and then play them for a while and compare the results. Because it would take you like 100,000 hands with each before you could detect even like small differences between them. And 100,000 hands is, you will already have like won or lost all the money. It's not like, that isn't like a practical way to do things, because the noise on your results is so large that it makes it very hard to look at your poker P&L. And in the same way, this happens with trades. I do a trade, the trade happens, now I own some options, or I've sold some options, and now things happen. The stock moves around, volatility might move around in the marketplace. Some of those things might be related to the trade, might reflect information that was in the mind of the people who traded, or it might just be like, well, things move around and like they're not that predictable. I think the random walk theory of like stocks is kind of vaguely plausible, and sometimes it's definitely true. And so what we have is this issue where at the end of some time, these options roll off and we have some idea of like, did we win or did we lose? The magnitude of our win or our loss dwarfs the magnitude of like what our true expectancy was, which is what we care about. As a trader, you will make some very good trades and they will turn out very badly. Things will go against you. The stock will randomly run against you before you have any time to get out of any risk. And this like pretty good trade that was actually had positive expectancy will lose a lot of money. And so poker is a nice training ground for, you're going to do the right thing and you're going to lose. And like experiencing that and dealing with it and working through it and training yourself to say, that's all right. And then you can feel bad after the market closes, or, like after the game is over or whatever. But on the next hand, on the next trade, you will be still making good decisions with your decision-making process, the way that you built it and the way that it will make money for you and for the firm. By breaking this up, I hope that I've shed some light on the poker culture at Susquehanna. Like, why do we do this? I mean, yes, it's fun. People enjoy poker. People play for fun, even, in the office, outside the office. But the reason that we have built it into our culture, into our education programs, is because poker and trading are linked in a deep way. And hopefully by going through a lot of these pieces, you have a much better idea of like how that linkage and how those parallels help us to learn how to trade better by doing something that is not trading.